G'day everyone, welcome back to Pete's Investing. Today we're talking about the S&P 500 on October 11, 2022, and we're using the strategy that was last posted with the Stochastic 200-100 period. Just reference the last video to get an understanding of the trading strategy. What we're doing today is just anticipating what potentially may happen with the S&P 500, if it's going to make any upturns or if it's going to continue in its down spiral. So as you can see here, I've got the daily chart, the 4-hour chart and the hourly chart, and just some potential trading ideas and how we trade typically with the average down approach. You can see here, this is the Stochastic 100-200 we've got here, and it's broken down approaching the 30 mark, which is close to our sellout approach. And you can see on the 4-hour chart it's broken below as well. So the strategy is whenever it breaks below, we sell out, we close out the position, and we enter when it's broken down from the 70 mark. So for example, had you gone short there at that point, you would have sold out and you would have closed out the position at that point there. So anyway, the way this works is, and I've got here an indicator, this shows the CCI 1500 with a weighted moving average of 400. So the idea is we trade with a direction in the trade of the trend of the daily chart only. So on the 4-hourly or the hourly, we only trade in the direction of the daily. So for example, looking at the daily, the CCI 1500 is broken below the moving average. So we only take short trades in this particular case down during this period. So at any point there, you will see, let me just draw a line where it coincides with that down slope there. So let's go back to that point there. Where it first shows in the where it breaks below the moving average and it starts on a bit of a downturn. Now you'll notice in the daily it's still in an uptrend on the chart, on the price chart. So again, you can see the line here on the 4-hourly and the hourly. So how does that work? So if you traded the 4-hourly, you would go short at that point there, and we don't close out the trade until it breaks below the 30 mark. So if you go short there, again based on the daily chart there, the larger trend, you'll notice the prices are appreciated. So we stay in the trade, we don't close it out with any stop loss, we use the average down approach. The price goes up, and we then enter another lot of shares when it breaks below 70 again. So you'll notice there when it breaks on the first entry, the close was 43.96, and the second entry now is 47.33. So the way it works is the new average price is no longer there, it's somewhere in the middle there from between that point and that close there, so somewhere in the middle there. Now, you've got two positions open theoretically, the price goes down, bit of an upswing there, keeps going down until you close it at that point there. So your closeout price would have been 4082. So you would have made a nice little profit, and that would have been over a few months since, December 2021, and you would have closed it out in May 2022. So where does that leave us today? So, and again, you would have done the same sort of strategy on the hourly chart, but again, you would have been in and out a lot quicker based on the hourly chart compared to the 4-hour chart. So the way you do this, I just demonstrated the example on the 4-hour chart, and on the hourly chart, you'd use the same strategy. So take short positions only. So again, ignore that uptrend there because you're so you want to take the short there. So that would have been your first trade. Okay, it hasn't come down and closed out below the 30. So you would have entered a second lot of shares, and that coincides with your 4-hourly trade as well, very closely in terms of the entry prices. It comes down and you would have exited at that point there. So again, let me demonstrate the first entry would have been 4689, second entry 4700. So do the average price between those two, and your closeout price would have been 4319. So again, a nice little profit there. Again, you would have gone short at that point and closed it out there. So going short there at 4475, closed it out 4415, and so on. Anyway, bottom line is the US market is potentially looking at reversing, but we're not going to go long at any time yet. we want to see this daily chart trend up. So there might be a bit of downside remaining. Let's just do a quick Fibonacci on the daily. So let's look at that bottom there, the bottom of the COVID period to the top there in that was in January 2022. You can see here also with the support resistance lines, it's coming down and approaching the 50% level. So and that sort of roughly coincides with a bit more downside on the stochastic 100-200. So I wouldn't go long at this point on the daily. I'd like to see that break above, like it did back here. I'd like to see it break above the moving average for any long positions to be taken. Anyway, that's it. If you like the channel, please support, press the like button, the notification bell, and subscribe. And if you really like it, go to the Patreon page and subscribe there as well. Thanks, and see you in the next update.